Welcome back, students, to our lecture series. Today we are going to start chapter number 8, which is about cost concepts relevant to decision makings. In this chapter we will see some basic terminologies for cost concepts, especially in relationship to decision making. Remember, I'm going back to chapter number 8. We said that one of the basic thing in engineering economics is to make decisions, right? So an important aspect in making decisions is about a cost information. Why cost is important? Now, for example, if we are familiar, let's say, with Almarai, for example, which manufacture dairy products. Let's say, what is the cost of making for example, one bottle for the 1 liter milk. Now, what are the costs? Can you think about the costs? Now, costs can be, for example, cost of the milk is one, cost of the plastic bottle in which it is produced, so, or cost of the labor, right? So here we'll see, in this chapter basically we'll see what are the different cost concepts and what are their relationship in terms of decision making. An important decision to be made in any organization is about a price. For example, what should be the price of the liter bottle milk, right? The selling price, right? Because that depends on how much it costs to produce, because the difference between selling price and the cost is the profit. So what will be that number? It all depends on cost. So that's why costs are very important for any organization. Here I'm just sharing you an income statement for Al-Mara'i. You can see here, this is an income statement of Al-Mara'i for 2011. We already know how to make an income statement, right? In chapter number 2 we looked at different types of statements. So sales minus cost of sales is gross profit. Gross profit minus selling and distribution expense minus general and administration expense is net operating expense. And then we have, so you can see here what are the cost elements here. This one is cost element, right? This is cost of sales, or sometimes we call it cost of goods sold. This one is also costs. This one also cost, but we call it expense. Why we call them expense and this is cost? This is what we'll see it later on. And why are those different items placed in a different places in an income statement? This is what we'll see it. So what are the cost items in income statements? Again, this one, cost of sales, and these we call them operating and general expenses, right? Similarly, we have balance sheet here for Al-Mara'i company. What are the cost elements here? Can you tell us what are the cost elements here? Inventories. You know what is an inventory? Is the basically when any organization, when they manufacture any products, right? What is inventory? Is the stock. Means those goods which are still in stock, not been sold. If we make something, either they have been sold. When they are sold, we call them cost of sales or cost of goods sold. If they are not sold, they are still in our warehouse, we call them inventories or stocks, right? Which are the products to be purpose is to sell them to consumers, right? Or to final customers. So these are the two cost information, very important. We need to have them, their understanding. So where cost is accumulated into inventories, and here this is our manufacturing cost. Basically this is the accumulation of manufacturing cost in the financial statements. Those products which are sold, we put them here, cost of goods sold, right? You know what is a cost of goods sold? It includes cost of material, cost of labor, and cost of overheads. These are the three elements which are part of a manufacturing cost. We call them manufacturing cost. right? When they are sold, we put it here in the income statement. Once they are not sold, right, we put them in inventories or warehouses. Now, what are their classification? This is what we'll see them. We can classify these costs into product cost and into period costs. What are product costs? Remember here, I'll go back. This is the product cost or a manufacturing cost. This one and this one. This is what we manufacture, right? This one and this cost is a product cost, right? Manufacturing costs. Where they are, right? Product cost includes, or manufacturing cost, just another name. Sometimes we call product cost as manufacturing cost. Means to manufacture anything you need material. Let's say to manufacture a bottle for milk, you need plastic bottle material, right? You need milk and some other things, right, which are part of a finished product. You need a labor who work in producing that product, and then overheads. So these are what these three things will make together, and we'll call them a product cost. Where they are shown in which statement? In balance sheet they are shown as inventory item, this one, right? But when these items are sold, they becomes cost of goods sold in the income statement. So this is how the cost flows in different statements. We need to understand. This is the purpose for this chapter. And period costs or other costs means this is our period cost, expenses or general and administrative expenses, because they are not directly related to manufacturing the products. But of course, selling cost is an essential cost, like cost of marketing, advertisement. These are all important costs. Distribution cost are important costs, right? But they are not part of manufacturing. We just need to put them separately. Okay, now period cost include all selling cost and administrative costs. This is what we call it, period cost, and they are part of the income statement. So the costs which are part of income statement other than the cost of goods sold, this one is a product cost. This is also in the income statement, cost of goods sold, right? If you go back here, this one is a product cost or a manufacturing cost, and then these costs are the period costs. So again, important for you to understand is what is the cost items in income statement, expenses and cost of goods sold, and inventory is part of balance sheet. What is included in inventory is those material which are, now basically even in the inventory for a manufacturing company, we have basically three types of inventories. Now what is inventory? For a manufacturing company, we may have inventory of let's say raw material. This is one inventory. You know, we purchase a material, we put it in a raw material warehouse, right? We have a mastoda for raw material, we put the raw material there. The next step, you will not bring all the material into your working area, into your factory and start producing, right? So you will bring it whatever you need, right? Right. So the next step, we call it is work in process or work in progress. This is another type of inventory for a manufacturing company. So you have raw material. So let's say, imagine it like this, and you have this one warehouse. This is for raw material. You have one warehouse where you put your work in process. Now your work in process. So basically inventory is of three types: raw material, work in process, inventory, right? Work in process means something is not completed. We brought a raw material in to our factory area, but we did not finish. Let's say we want to calculate, we want to prepare our income statement today. So what we find out, there are some items which are not completed, right? and some items which are completed we call them finished good. Finished good inventory. So basically this is what we have finished good inventory, right? So inventory can be classified into three things: raw material, work in process, and finished good inventory. Finished good means the product is complete and ready to be sold to the customers. So coming back to our slide here, right? So this is the explanation of this inventory. For a manufacturing company, we'll have three types of inventory, right? Raw material, work in process, and finished good inventories. Now I'll explain more with this example 8.1 given in our book as well, right? So if you see at this example, you can find out how we can classify a cost for this ice cream shop here. If you read it carefully, it says that why there is a cost of, remember here what is the given information here we have. Actually, I'll just explain. This is our example number 8.1. These are the given information, right? Here is a look, for example, why it cost 2.50 for a single dip ice cream cone. Why there is a cost of 2.5? What is the 2.50? Is a cost of making a one ice cream. This is the detail. These are all items for costs, right? You can see here what is a price of an ice cream, right? It is given here, unit price. We don't have to solve. It is only the informations are given, right? So this is given for ice cream, to make an ice cream. This is what we need: cream, sugar, milk, and milk solids, right? Now what is this one? This is a unit price of making total 120,250. The cost for those total cost for how many? It's given here. You can see here actually in the question that the annual sales volume, right, is 185,000 cones. So this company, they produce 125,000 cones for ice cream, and this is the total revenue which they bring in. Revenue means this multiplied by the sales price, right? So if you multiply this with the sales price, you get this one, right? Or if you want to know how many unit price, what is the price of one ice cream, you can also find out very easy. Simply this total revenue divided by total number of products sold, right? Or if you want to convert these cones into a daily sales, it's 500 cones per day, right? Assuming 7-day operations. Basically this is what it is shown in this table 8.1. So what we can see here, these are the different cost items here, right? These are the different costs for any business. They have the cost of material, cost of cones which they will use in ice creams, rent of the building, wages, payroll taxes. What is the payroll taxes and what is the wages? Wages are given to employees. The salaries, which is an hourly wages based on hourly or based on the units of the product they produced. Salaries, on the other word, is a fixed salary that does not depends on the number of hours work. It's a fixed monthly salary. So in the business, sometimes we classify them into salary is separate and wages are separate. Similarly, we have payroll taxes, the taxes which is given to the government on salaries. We call them payroll taxes. Sales tax, okay. Another type of tax is business tax. Debt service means you have a loan from a bank which you have to return. So this is, we call it a debt service, means returning the loan. This is the amount of loan you are returning. It could be interest expense or returning the original amount, whatever it is there. Supplies. Now supplies, what are supplies? Are the small amount of materials used in any businesses, like for example ink toner, pencils, pens, stationery. These are supplies. We call them consumables because you can quickly consume them, use them, right? These are what we call them supplies. Let's say stapler, the batha you call it, or pins used in staplers. These are all supplies. Utilities, electricity, water, gas, and some other expenses. So these are the total costs. All are the costs, and this is the total revenue minus total costs. This is the profit they are generating. Okay, so total revenue minus total costs. This is what we call it a profit. This column is unit price, right? Which is what is the price per this one, 120,250 divided by 185,000. You get this one. Again, this divided by total number of unit or cones produced, you get this one. And what is the percentage of their total cost? This column tells us what is their percentage of total cost. What is the total cost? Is you take a total, right? What is the percent as a percentage? What is this total cost as a percentage? You can also calculate it, right? And then these are just a given information, right? So this is a unit price, which is 2.50, right? So this is our total volume, which is given based on these numbers are based on 185,000. Now the question here is very simple. Just look at here. It says if you have to classify operating costs into either product cost or period cost. So out of them, these costs, this is the question basically. Not the calculation is not important at this point of time. The important point what we need to understand is which of these costs are product cost and which are period costs. Okay, so this is what we'll see on the next slide. So what are the product costs, right? So this is based on the given information. I'll show you. Price per cone is 2.50. Annual cone sales is 185,000. What is the total sales? 2.5 multiplied by 185 is 462,500. This is already given. I'm just showing it here just for your information. Now this is also the same table. I'm just producing them again. Here it's the same one which was given in your book. We don't have to solve it anything here for this one. What is important is this one, the product cost. The question says what is the total product cost. Now what is a product cost? Now product cost means in order to manufacture, what is the product cost? Now to find the product cost, you have to come back here and see the item here. Which items are related to product cost? Product means in order to make a cone, which are the product cost, means which you can directly identify it. Okay, this one, can we identify it with the cone itself when we take a cone? Yes, ice cream is there, cone is there. So this is what we call it our material cost. These two are our material cost. Rent is not a product cost. Why? Because we pay rent per month or per year or per 3 months. So it is not directly related to making a product, right? It is, we call it a period expense. Wages, right? What is wages? This one, this cost, wages cost. Wages are always, remember this is very important. Wages are those labor who work directly on the product, and we gave them the wages based on the hours they have worked. So this one is a direct labor cost. Payroll taxes is just as an expense. This is also expenses, taxes, not part of a product cost. Debt service, not part of a product cost, means when you return a loan with interest. Supplies, no, it's not part of a product cost. Utilities, yes, sorry, up to here, yes, I'll come back to this one. Now supplies and utilities, these are important. You need to understand what are utilities. Electricity is used, gas is used, right? But they are also important in making the product, right? Supplies also, let's say some small amount of syrup is used for garnishing or for decorating, or some items, or small paper is used to roll the cone, to hold the cone. So these are the type of products cost which are also important, but it's not directly, they are indirect costs. This is what we call it overheads, right? So supplies and utilities are the overhead costs, right? So then these are the other expenses, profit. So the question was what are the product costs. So we just need to add those items, right, which are ice cream and cone. This is our material cost, this one. This is labor. These are the two overhead costs. So if we add all these items already given, this is our total product cost. Why we need to classify the cost? Because if we want to control the cost, to make a decision, we need to understand the cost terminologies, which costs are related, which is not. Maybe you want to say that, okay, let's say this cost of cone is very high. Maybe we are buying an expensive cones, right? So we need to reduce this cost. Or cost of labor is very high. Maybe they are not well trained, or their efficiency is not good. So could be anything in order to make a decision. Now you know that if you make any decision on these one, it will have an effect on the quality of the products. Let's say if you replace the cone with a cheap cone, it might affect the quality of your product. So that's why in business it is important to understand the cost terminologies and the impact of that one. It's very important in order to make a decision. So that's why we have this classification. Now another cost is period costs, right? What are the period costs? All other costs are period costs, right? They are the payroll taxes, sales tax, business tax, rent, debt service, or other costs. These are all period costs. They are not directly related to manufacturing of the product. Again, if you want to make a decision on reducing a cost, can we reduce this cost, payroll tax? No, it's given to the government. We have no control. We have no control. Maybe rent. Again, who is responsible for this cost? Maybe it is not in our control because it is the owner of our building. Debt service, or you cannot do anything here. So maybe you are just left with these items, if let's say in order to reduce a cost. So now you have a cost classification in front of you as a decision maker. Now you have to make a decision which cost to control. What are controllable costs and what are not controllable costs? Again, purpose is to make decision. If you have just one number, if you put all these costs into one, you may not be able to make a right decision. In order to make a right decision, you need to break them and look each of them separately in order to make a correct decision, right? So of course, for any business to become profitable, you have to sell more than your costs, both costs, product cost and period cost, right? If I look at here, right, so our profit is, see, this is our sales minus these two costs. So this is how the profit was calculated. It's already given, we don't have to calculate, I'm just explaining. Okay, so this is how the profit is there, right? So total revenue minus product cost and period cost. This is how the profit. So now with this scenario, you can make a better decision. If you want to increase a profit, what you need to do? Either you increase your sales. How you can increase the sales? It's up to you what decision you are going to make. Or you cannot increase the sales, but another challenge is to reduce cost. So which cost to reduce? Okay, this one. means any item from here, which one to reduce, what will be the effect. So you have to look at all those aspects in order to make a decision. Next one is our engineering costs, right? I'll go back to next slide, which is, now we look at it for engineering point of view. Now that one was a small example, so to understand different types of cost classification. So now we look at engineering costs, right? Now in engineering we have to evaluate different alternatives, right? If you want to look at different alternatives, it requires many costs need to be analyzed, right? For any project, any engineering business, right, you may have different types of costs to be analyzed. Maybe you have an initial investment, cost of purchasing a new machine, cost of constructing a new building, new construction, or you want to update your current facility or your factory modification, labor cost, parts and materials, inspection and quality, training, material handling, some fixture and tooling, data management, technical support, as well as general support costs. So these are different types of costs which you have to deal in your daily life as an engineer. So you must need to understand which of them is a product cost, which of these are period costs. So their classification is very important, because at the end it will affect the profitability of the firm as well as the selling price. So that's why we need to look at it into more detail, right? This is figure 8.1, which is in your book, to explain how different types of manufacturing costs occur in any manufacturing business. As we understand, this is very important to understand this sequence of costs. So for any business, we purchase a raw material, right? When you purchase a raw material, let's say you need to purchase a plastic plastic raw material in order to produce plastic bottles, right? So what you will do is you will purchase a raw material, put it in a raw material warehouse. You will not bring the whole material into your factory area and use the whole material in one day. No, you will keep the material into your warehouse, and at the end, when you prepare your financial statement, whatever you have, it will be shown as inventory of raw material. Just as I said before, it's the same thing which I said before here. Inventory is raw material, work in process, and then finished good inventory. Right? So then after raw material is there, then you bring them into a manufacturing cost. This is your factory area, your factory, right? Where you actually make your production area. In order to make anything, you need a raw material which is used. From here you bring a raw material to your factory area. You have your labor who worked on making that product, and then you have overheads. You add all these things together. If the product is finished good, is complete, that goods will be transferred into finished good warehouse, next warehouse, right? Things which are not complete, let's say today is the last day of a year and you are closing your accounts and you have to prepare your balance sheet. So whatever left today is in your factory which is not complete, we call them work in process, right? It has a work in process inventory, and then whatever is completed, we move it to a warehouse of a finished good, right? This is what we call it, cost of finished good inventory. So this is the goods which are not sold to customers, and they are called inventory of finished goods. Once it is sold to consumer or customer, they become cost of goods sold, and it is consumer. So you can see here, this information appears this in a income statement as I shown before, right? This one is part of a balance sheet as a inventory, your raw material inventory, your work in process inventory, your finished good inventory. These three are part of balance sheet, and this one which has been sold, it is shown as a income statement item. So this is how the cost, manufacturing cost, flows in any manufacturing business. We move to next, the same thing which I said before, cost of goods sold is shown in the income statement, right? And expenses as incurred, like rent expense, like advertising expense, selling and general expense, they are shown in the income statement as incurred. We call them the period cost. Product cost, like material, labor and overhead, they will be either in inventory, and if they are sold, those items, those costs will be shown in cost of goods sold when goods are sold. So it's the same thing what we have already discussed. Again, same thing, in a balance sheet you have a raw material inventory which comes from a direct material cost, part of a product cost. Work in process is labor and manufacturing overheads, right? So direct material used in production to work in process, and then finished good inventory, this is the same step, right? Balance sheet items are these 1, 2 and 3. When goods are sold from finished good, they call them cost of goods sold. It goes to income statement, cost of revenue and selling and administrative expense. So this is how income statement is prepared, right? So you can see here what are the product costs and what are the period costs. Now, what are manufacturing costs? We are looking into a further classification of a manufacturing cost: material, labor and overhead. What is a direct material? We can see from here. Let's say in this picture, what is a direct material? These tires, right? This body, the glass, these are all direct materials. In order to manufacture a product, this material, which you can easily identify it with the finished product, this is what we call it, direct material. What is direct labor? The labor who work on making this product directly, we call them direct labor. Manufacturing overheads, those costs which are not material, which are not labor, but it was necessary to make this car, we call them manufacturing overheads. For example, cost of electricity used, or the depreciation of machines which used in making this car. These are all overhead costs. Further explanation: direct material, a raw material that become an integral part of the product and can be conveniently traced directly to its product. For example, a radio installed in an automobile is an example of a direct material. Direct labor, a labor who directly work on this product, the cost that can be easily traced to this individual units. For example, wages paid to automobile assembly workers, right? Those labor who directly put on some parts, they work in an assembly plant in a car. So those labors are direct labor because they are directly involved in manufacturing the cars. Manufacturing overheads, costs that cannot be easily traced directly to specific units of products or units produced. Now it could be indirect material, right? Now what is indirect material? Maybe lubricants used, cleaning supplies used in auto assembly plant, or indirect labor, those wages paid to employees who are not directly involved in the production. Janitors, for example, security guards, they are not directly involved but their cost is there, right? Okay, so this is, we call it a manufacturing overhead. Now manufacturing costs, or again selling costs, the non-manufacturing cost or period cost is the same thing. Non-manufacturing cost, or you can call it period cost, it is same thing, right? So period cost or non-manufacturing, these are selling costs, costs which are necessary to get an order from a customer and deliver the product. Distribution cost, right? Administrative cost, cost of executives, management of the company, raised and fees, CEO, accountant, purchasing department. So all these clerical costs, these are administrative costs. These are also important, but these are different types of classification. So again, same thing what we have seen before. So product cost and period costs, right? Now it's more clear. Now if I look at Next one here, can you identify which of the following costs would be considered a period rather than the product cost in a manufacturing company, right? So can you identify it, which of them is a period cost? Part A says manufacturing of depreciation, manufacturing equipment depreciation. We use some machines in a factory to manufacture, so their depreciation. Is it a product cost or a period cost? Now see, this is a depreciation on manufacturing equipment. It is related to manufacturing but indirectly, so that's why they are overhead costs, and overhead cost is a part of product cost, so this is not right. It should not be a period cost. Now this one, now property taxes on corporate headquarters. Now there is a property tax given to the government on a headquarter, let's say a Sabiq headquarter in Fanatir as an example. Is it a product cost or a period cost? Yes, it is period cost. Why it is a period cost? Because it is a tax on a corporate headquarter which is in Fanatir area, which is not it's not on a factory. But if the same thing here, property taxes on a factory in Jubail industrial city, right, instead of this, then it becomes product cost, right? So but now here it is a period cost. Direct material cost, it is a product cost, yes, directly. Electrical costs to light the production facility, electrical costs. Now what are the electrical costs? Electrical costs, but cost of electricity to the production facility means your production area, your factory. Cost of electricity for your factory, in other words, it is also now a product cost. But if the same question here, electrical cost of the company, for example, then it becomes a period cost, or then it is not a product cost. We cannot identify it. So anything related to factory is a product cost, right? So sales commission is, what is sales commission? Product or period? What is sales commission? It's a nisba on sales. Let's say you give some commission to sales people, those who are working in sales department. When they sell something, you may give them some percentage as an incentive to increase the sales, right? So let's say 1% of sales or 0.5%, whatever amount of percentage, this what we call a sales commission. This is a period cost. So what was the question here is to identify which is a period cost. So basically these are the two period costs, right? Your property taxes and sales commission are the period costs. Now what are the other classification of costs? Is manufacturing cost or product costs, right? Sometimes they are classified as direct material, direct labor, overhead, but we call them another classification. This is important for your theory. Material and labor is a prime cost. To make anything, the basic cost which are required are material and labor. This is what we call it, our direct labor, or we call them direct material and direct material. You add them, it becomes a prime cost. Now what is a conversion cost? In order to convert something into a finished product, you need labor and overheads, right? In order to convert raw material into a finished product, you need labor and overhead. Without these two, you cannot convert material into a finished product. So that's why we call it conversion cost. So labor plus overhead is conversion cost. Material plus labor is a prime cost. Now again, this is the same thing. This is just, I took it from your book. Raw material, work in process, finished good inventory. It's the same information which we looked at earlier. So you can just see it for your theory, important information. Now this is a summary of whatever we have seen so far. Direct material plus direct labor is a prime cost. This is your material, this is your labor. If you add them, it is your prime cost. this is your labor cost, this is your overhead cost. If you add these two, it is a conversion cost, right? But what is your full production cost or full inventory cost or full manufacturing cost? It is material, labor and overhead. This is what we call it, a full production cost. Selling cost is this one, general and administrative expenses, this one. So for any company, this is the full cost. You have material, labor, overhead, or in other words, these top three boxes are product cost, and these two are the period cost. For any business to become a profitable, you have to recover your full cost. Your sales must be more than this in order to make a profit. So next question here is just an example on your books, right? Okay, you need to identify which of these cost is product cost and which of them is a period cost. It is an important question also for your exam, if there is any. Then you will have one question from this as well. For example, first one in this question, office fire insurance, is it a product cost or period cost? Product cost means it is related to manufacturing or not. Office fire insurance, office, not factory. If it's factory fire insurance, then it is a product cost. But here it is office, maktab, remember, not factory. So this is a period cost. Cost of electric power. If it is cost of electric power for factory, it is a product cost. But here it is only electric power cost, right? Then we don't know it is for factory or not. So then in this case it is a period cost. Rental charges of a warehouse, rent, ijar of mastauda, warehouse, again it is a period cost. Cost of basic raw material used in production, yes, it is a cost of raw material, yes, it's a product cost. Depreciation of electrical equipment in plant, depreciation in plant. See, plant means your factory area, plant. Depreciation in your factory area, it is a product cost. Depreciation of furniture in the office, in maktab. Now, in this case, this one is a period cost. Understand the difference between these two. This is a depreciation in factory area, in plant, and this is a depreciation in office. So this one is a product, means it is part of overhead, and overhead is part of a product cost. This one is a period cost, depreciation in office. Sales incentives, sales commission paid to sales personnel is a period cost. Inspection cost of a raw material, inspection cost of raw material. Raw material is part of a production process, but those who are doing inspection, whether the quality of a material is good or not good for a production, they are not directly involved, but they are indirectly involved. This is, we call it cost of indirect labor, and this indirect labor is part of overhead, and overhead is part of a product cost. Direct overhead cost, which is directly overhead cost, direct means with the manufacturing, so it is a product cost. Cost of packing material, cost of packing material, it of course packing material is part of a finished product, so it is a product cost. Last time is overtime premium. Overtime premium, you know what is an overtime premium. Now overtime given to the labor, right? Which labor? The labor who worked on the finished product, right? Overtime premium. What is premium? We know that when any employee work more than its allotted hour, let's say 8 hours per day is a normal working hour. If an employee work for 10 hours, for that 2 hours you have to give him an extra salary, not normal per hour rate. So that is what we call it overtime premium, right? Overtime premium is normally given to production employees who work on overtime, so it's part of a direct labor, right? And we put it part of a product cost. So the solution also on the next slide is the same thing here. right? So why we call them a product cost? What are the reasons? Here it's all mentioned, but I have discussed, it's the same thing. So this is where we stop this lecture. So just review these slides, solve these questions again. It's important. This is a very long chapter. We are going to have around 80 slides for this chapter. It's a very long chapter. Basically it covers almost 3 chapters in one. It's a very long chapter with different concepts. So very important, spend time, look at these slides carefully. So practice, and if you have any issue, just send me an email. I will be happy to answer your questions. So that is end of our first lecture for chapter number 8. Thank you very much.